Hello, fellow traders. How is everyone doing today? Tuesday, the 22nd is the date we're working with here. We've been in this trade for quite a bit and not going to actually take any activity from here. I just wanted to kind of further discuss a little bit more on the topic and expand on the last video a little bit more, and kind of basically explain a few things of why I'm still not feeling stressed, still not irritated, still not even disappointed or otherwise concerned about what the situation is. A lot of people would look at this and say, well, this is a complete catastrophe. It's just not going to work. Some in this situation may have already hedged, and that is perfectly acceptable. To do so, if you've already done that, it's potentially could go lower. But I'm going to kind of touch base on why I'm not doing that in this video just yet, and kind of what we're looking at overall. So if you've been following the series so far, you would kind of know already that we did talk about this circle here. This is a supply and demand area where supply and demand type traders are going to be taking entries, so it's possible we could see our retracement start from this area. You've got to watch out for from below though, because if banks want to grab liquidity to go back up, they're certainly going to drive it down a little bit lower to get that liquidity. So they're going to be hunting for stops, of course, for people going long, and supply and demand traders typically will go pretty heavy with a short stop, trying to get that infamous 10 or 15, 20 hour trade, which has a low probability of working out. So I'm just going to wait and do what I refer to as let it float. Now, from the, previous where we were talking about this area, and we kind of refer to our risk in terms of kind of a general rule of thumb, or if we're even going by a calculator, we would have kind of tried to plan for this, because of course you would use different levels, kind of what I laid out in previous videos, of around 90 or so to keep your risk split apart and manage your risk. And what that allows us to do is build up a large position, just like in the Forex Gambit, to basically build up a large position, and we've brought our break-even position with us. So if we look at this in terms of hedging, of course, my luck, as soon as I'd go and flat and even this out to go short and balance this out here, my luck would be it would go ahead and turn around, and now we're stuck in a situation where we're essentially trapped. Now, we don't want to get in that situation, so I'm going to just let it float through. Another reason why is, again, we're talking about this risk. I keep saying that if your margin and your drawdown can fit inside your account balance, there's no issue. I've also kind of mentioned several times before, as long as you still have margin available, you can still very well do plenty of different things. As long as you can open a position, you're not in trouble. So we want to make sure that we maintain that ability to open a position. So in regards to adding in, we'll go to the other side of the spectrum. Right now, it's probably not to our advantage to add in even more. Even though it's a likely spot that this could turn around, it would increase the value of our negative side of it without much risk to our positive side, because right now, the way we're set in both accounts, our break even is going to be about in this range here. In the MT4 account, our break even is about here. In this account, the break even is about here. If we were to add, even in from this position from both accounts, it would not do much to help our break even. We would be bringing it down only maybe 10, 20, maybe 30 pips. So right now, we've accounted for everything, so there's no reason to even be worried. We planned for it, so there's no reason to worry about anything whatsoever. We planned for it from the start. We decided from the start we were okay if it came down here. And if we're not okay, then we need to adjust and figure out what kind of risk would allow us to be okay with a completely atrocious situation like this. So by planning ahead, we still have no reason to lose sleep. I slept probably about 8 hours from 2 o'clock in the morning or 3 o'clock in the morning until about 11 o'clock this morning. I didn't even wake up for New York. It just, it's already accounted for. So there's no reason to stress. And right now, because I still have quite a bit of room left, things still kind of work out. I have double what's required to open any kind of hedge in the opposite position. I'm just going to allow this to float and see if it's going to drift and come back. Now, if it does go considerably lower, it could still be to our advantage to add, but we would want to do so from much further down. The reason we'll do that is because if we add down here, our break-even point is now around here or maybe even slightly lower. So once you start getting deeper into this, you want to get wider with your add-ins. This way your drawdown does not go up exponentially, but your break-even point does not decrease its movement exponentially as well. So everything is a trade in trading. So if we trade a longer wait time to get a better price, we also trade for a better break-even position. If nothing happens now and it continues to reverse, we don't add in, we still get the same or similar area of break-even if we were to add in from this point right here. So that's kind of how the math works, just in plain English, and what's going to happen if we do each scenario. And I mean, kind of like I stated, it's just my luck. We hedge out and now price would reverse, so I'm just going to let it float. So no reason to be stressed, no reason to worry. And of course, we always know that a market is not going to go in a straight line forever. This downtrend started back in September, the end of September. So, and just a few more days, we'd have a whole month of downside, and we've been wrong at that point. But, it kind of happens where the Euro USD will move for an extended period of time in one direction. You can see here, for the whole month, August to September, it moved up. Now we're going from mid-September to almost mid-October, a little bit further. It's just going straight down. So, the market's going to have its cycles, and we're just trying to be a part of either one of these cycles if we can get it correct from the get-go. If we don't get it correct, then we just plan to hang on to it and allow to work with it until it does finally move back in our favor, which, of course, it eventually will. Now, I know Goldman Sachs is calling for below parity. We've fallen a considerable amount off the high so far. We've fallen about 500 pips, 600 pips down. So, we're essentially, let me see. Make sure I'm looking at this numbers correctly. We're at the 112 at the peak, and we're at 108. So we've come down about 400 pips so far. And about 400 pips is one of the widest ranges that it will typically make. We've got a situation back in previous times from where we opened the year, and from July to October at the end of last year, where we kind of hit the 112 and fell off quite significantly. And it may have played out differently than what we see on the chart now, so we can't really say what we would do. But there are ways to handle this kind of situation. Right now, we're still not really having much issue, and I don't really foresee, especially all of these levels here that we're looking at, I don't foresee every single one of these levels just giving up. We're going to get something at some point. I'm going to wait and see if we get our reaction from here. If not, I may wait to add in down here, much further down, so we can bring that break-even point even further down with us without causing too much more strain to the drawdown, because at the end of the day, it's not going to go forever. It's got to get some release somewhere. Eventually, people are going to look at this as an oversold market and buy just simply because it's oversold. You've got your supply and demand traders. You've got your support and resistance traders that are going to hit from here. They're going to hit from here. They're going to hit from here. They're going to hit from here. So one way or another, we're going to be starting this retracement soon. And if we get down here, or even if we get way down here, the further we wait, the longer we wait to add on, the more advantage we actually get out of waiting. We don't want to make a whole lot of trades. We just want to kind of stay with the market and flow with the market. We don't want to get impatient. In most cases, we're only looking at maybe an average of 100 trades per year. We're making like 5 to 8 trades per month tops. So there's really no reason to just get antsy or start opening more trades. Of course, that'll raise more expenses for us, and so on and so forth. So our strongest plan and our strongest play from here, because we still have a lot of room, would be to potentially add in a little bit more, or just wait and see if it doesn't go lower, if it finally comes back. So if we do want to add in some more, we'll just wait for another level, because adding adding from here, we're not going to get too much gain or advantage out of it. It's not really going to help us as much as it could potentially hurt us. So let's just hang tight and wait, not worry about psychology because it's foo-foo, and just stick with our plan. We planned for this. We planned for this to come this low. We planned for it to happen. We didn't want it to happen, but if it happened, we wanted to be able to hang on and account for it. So as long as we can sustain the negative, there is a very low chance that we will not get a positive out of it. Very, very low chance that this will not come out positive, even still from this position. So if you did hedge, go ahead and kind of refresh yourself on Achilles heel. That would be the next step. And basically how I would handle this, I would use basically the technique for removing position size and reducing position size if I were to hedge from this point. But at the end of the day, I still think that just my luck, I would hit the short, and later on in London session, it will reverse. They'll grab liquidity and it starts moving up, and now we're just stuck and dragging this trade out even further. And now looking at math, it's really not advantageous. If nothing else, it's creating a bottleneck by trying to trade both sides. Independently and on paper, it looks great, but in action, it does not make things any faster or easier, and it just makes things actually more complicated by managing both sides and multiple accounts. But everything has its place, and eventually we're going to have to stop this if it does not turn around. Now, I'm still kind of looking at the fact that these candles are fairly small. We got a couple of little hard pushes here and there, but we've got a lot of small candles. And now you look, we're starting to get larger candles, harder pushes, bigger moves. So the attitude of the market is definitely changing. It's definitely turning around a little bit. So, going down more or not, we're not going to just fall off a cliff. We've got to get some relief somewhere. Even if it's just to come up a little bit, all we have to do is hang on and hold and contain our drawdown and margin inside of our account. And when it eventually does decide to do what it's going to do, whether it be from here, whether it be from here, any number one of these places could be a potential level area. I would think most support and resistance traders are going to be waiting for here, and that would be where I would want to add another position if I have the room to add and think it should be a case of adding. So I've also got a little bit of a deposit schedule going on this account, but I'm not sure if I'm going to deposit or not, just for the sake of kind of showing that what happens later on, like when you get a bigger account especially, you can't just deposit to save yourself. So we're not going to leave that option as an excuse or availability. We're just going to take this as it is and manage it from there. So Right now you can see the nav is 696 and 193 drawdown, meaning we have a balance of 900. So 900 it is, and 900 it will be until we complete this round. I've got a few other ideas as well I want to try live, and I'm also debating whether or not I want to jump back into futures now or wait just a little bit longer and build up a little bit more. But I'm kind of ready to put some new ideas into some live money, so I'm going to go ahead and run that cycle. I've kind of hinted at a little bit of new strategy that I'm working on. It's basically you're thinking like a toddler and taking a little bit here and there. And right now I'm kind of getting mixed results in the back testing, so I'm going to test that a little bit further, but I also want to try a few different instruments with it to see how that goes and just kind of go from there. So kind of up in the air for where this deposit is going to go. One way or another it's going to be traded, but I'm going to hold out on this account and try to manage the 900 that we have to completion. That way we can't just take the easy way out, so to speak. So stay tuned, subscribe, leave a like, and I will see you on the next video so I don't ramble on forever.